Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment, taking a look at Coinbase. For that, we want to bring in our next guest. That is Landon Swan, co-founder of Likefolio. All right, Landon, it is good to have you with us today. So let's dive into this one. I mean, Coinbase over the past month, it's essentially been flat, a little lower today heading into its results. So what does your latest data tell us?
Yeah, I mean, if you look at what happened last quarter, they were trading at maybe 378 right before earnings. Nice little drop down to 314. Pretty disappointing result. We've bounced now, I guess, since then, 20 points or so, 338-ish range. But basically, everything came in a little bit weaker, mostly on the retail side. Retail trading was up 16% year over year, but they wanted more than that. And so they've had a little bit of a little bit of a recovery, but it was a pretty big drop going into that. Now, when we look at Coinbase, it's kind of changed, right? I mean, it used to be just the place where the retail trader could go and buy Bitcoin, and they added some, and now they've got a lot of coins. But now they're really expanding their offering into all kinds of DeFi. And so when we look at what they've got, the stablecoin USDC, they're getting a lot of revenue from that. That revenue's up 38% on a year-over-year basis, now up to about 330 million. Very strong numbers there. You can see that top part, or sorry, the pink part is the USDC. Stablecoins in general, though, are growing significantly as people use them as a vehicle to move money very quickly and into and out of platforms that allow trading of cryptocurrencies like Coinbase. So that's a big move for them. They're also introducing the ability to get loans on your Bitcoin. They had over $1 billion in originations on loans on that. So you can deposit your Bitcoin, get a loan in USDC through their partnership with Morpho, and then you can use that money however you like. It's a pretty interesting program. They've also, they're getting into tokenized assets, derivatives, prediction markets, early stage token sales. So they're really becoming, or they're trying to become, the one-stop shop for everything crypto. So they've evolved quite a bit beyond just the retail going in and buying some Bitcoin. They've got partnerships with Citi, which is going to allow them to do global stablecoin payments, fiat conversions for institutional clients, staking and liquidity through Galaxy Digital. So again, a lot of DeFi stuff, a one-stop shop, and they're growing very, very rapidly. When we look at the actual data, how are people reacting to their offerings? Retail's actually doing pretty well. The web visits are up about 34% on a year-over-year basis. There was definitely a dip. I think that was reflected in last quarter's earnings, but now we're starting to move a little bit higher. Again, this is what's interesting about this company. It's no longer just a retail company. It's very much institutional. I do think that their fees are still too high. They need more competition. Gemini, if you're following that one, I think it IPO'd, opened around 32. It's down to 18 now. They're the next one maybe who can compete, but until they get serious competition, the fees are going to continue to be high, and I think that might hurt retail volume a little bit, but it's going to help profits. So we'll see how that plays out. But overall, it's a pretty strong numbers on the growth side. We do like that it's pulled back from the highs. It's about 40 points off of those highs of the previous earnings before the last earnings call. So overall, somewhat bullish on this one. I think if obviously they're going to trade with crypto, Bitcoin's down a little bit right now, kind of sideways in the 110 range for a while. But if there's a run on Bitcoin, you're going to see a run on Coinbase. They trade very much together as interest in cryptocurrency goes along with, interest in trading cryptocurrency, obviously. Overall, pretty bullish on them, and the data supports that thesis. That's where it comes from. Again, about 34% up year over year on the web visits, which is reflective of the retail side, but they've got a lot of other, fires on the stove where they can take in money institutionally.
Yeah, Landon, we talk about that. The monthly transactions per user was down 10% last quarter, so that's why the stock got hit. But at the same time, Landon, as more people come into this space and competition does start to ramp up, I understand the correlation between Bitcoin and Coinbase. It's almost lockstep. As far as trading goes. As the competition heats up, is that going to actually hurt? Because it seemed like one of your charts did show that the stock price is maybe above what you're seeing as far as sentiment goes.
Yeah, absolutely. I mean, you can draw a huge parallel to stock brokerages, 15, 20 years ago and Coinbase today. They're getting away with fees that they're not going to be able to get away with 5 or 10 years from now. It's going to be much more commoditized. The prices are going to go down. And you can see here that, yes, it is up on a year-over-year basis, that blue line, but the stock is a little bit, I guess, stronger. It's outrunning that just a little bit. However, I think the expectations being lowered from last quarter's miss, given that plus the rebound in retail. So even though it's lower than we would like it to be, it's higher than what the expectations would suggest it is, if that makes sense. So it's actually bounced. Retail interest has bounced on Coinbase. And I think that because the last quarter, that was what hurt them, I think that the lack of that negative is going to be a positive for this earnings report. So we're leaning bullish on that under the assumption that retail is making a bounce back. And again, that's supported by the data of the web visits going up. Obviously, more people go to Coinbase.com and use their app, the more people are signing up and trading.
So Landon, then to put a fine point on it, since you said you're somewhat bullish, what would be your earnings score on this? I know expectation is for adjusted EPS to come in $1.03. Revenue is expected to come in at $1.75 billion. What's your thought?
Yeah, so, as you guys know, our earnings score goes from -100 to +100. We're actually pretty bullish on this one's coming in at +63, which we don't get a lot in the 60s. I think a lot of it has to do with, again, the pullback that we saw from that last report and just a little bit of bounce from there. So we believe expectations are very low. That's reflected in that +63 number. And then again, it's because the retail has bounced. The retail interest has bounced, and it was so low last quarter that I think that if there's a lot of bears out there that are expecting that last quarter was the beginning of the fizzle out for Coinbase, that's not the case. And I think they're going to get a surprise if that's their position. That plus, I think there's a lot of good news coming out of all the institutional DeFi stuff, especially with USDC and the stablecoin. So they've got a lot of avenues, but if the focus on the negative side is retail, we think that goes away. We think that's a positive this quarter. And then they've got all the other institutional stuff that I think you get a lot of good news out of. So overall, +63.
Okay, +63. That is Landon Swan, co-founder of Likefolio, with a look across Coinbase.